This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. From the newly announced U.S. UK trade deal to shifting dynamics in the U.S. China relationship, we explore the market's reaction to recent announcements, including Trump's proposed executive order targeting pharmaceutical pricing. Is the administration's tariff strategy finally paying off? And what could lower drug prices mean for American consumers? Here's David's take. Well, David, I don't want to spend too much time on this because we're going to dedicate the whole second segment of the program to the patriotic parade, but I'm so excited. Mike Schudel and I will be announcing the parade this year. Just give us a quick 30 seconds. What got you involved with Patriotic Productions, and what? Because you're going to be down there for the parade.
Yeah. So Bill and his wife, asked us to participate, and I think that was from they followed us like with America's Wall of Honor, which we've been participating with for years, and know that we were patriotic in nature, and so asked us to starting to support this. And this is what, our fourth year now, or I can't remember, but anyway, most of the years we've been on board. They've been doing it for over 5 or whatever. But it's a fantastic event. It's a great parade to celebrate patriotism, which, has almost been not allowed, it seems like, in our country. So I think it's on an upswing. And, there's nothing better, especially if you got little ones, little grandkids or kids, small kids. Parades are a lot of fun. I mean, I remember going as a kid, holding the flag while all the floats go by. And here it's going to be all floats and people walking by that are all tied to patriotism and to service people that have serviced all our wars, et cetera.
Well, so it's a rolling history lesson, too, because you've got people, including kids, in period costumes and reenactors and so forth, all the different wars, all the main epics of American history.
I think it's great. Fantastic. I mean, I was a kid. You would go to Boy Scouts, you would go to parades. This is the normal thing, and maybe it's making a comeback, which would be fantastic to see.
Well, more on that in the second segment. Now, it isn't often, David, that Donald Trump gets knocked off the front page of the newspaper, so to speak, but it happened last week when a new pope was elected. Now, we actually have a question in our Q&A today, David, about that, so hold your thoughts.
Right.
Keep your powder dry, but we will want to get your take on that. But something pretty big happened that normally would have dominated the news cycle last week.
Well, I just want to put it out there that...
Yeah.
I mean, you would have lost this bet, if you would have bet Chicago Bears get a quarterback that throws for 4,000 yards or Chicago gets a pope first. Which one happened first, right?
Well, and for we local Catholics, our new archbishop also is from Chicago, so Chicago's on quite a roll here lately. More on that to come on the pope, but something big did happen in international relations, and Donald Trump right in the middle of it. David, here's the CNBC headline. U.S. UK, it's United Kingdom, of course. U.S. UK trade deal from Ford to McLaren, steel to beef, impact to be limited, says freight CEO. This is Andy Abbott of Atlantic Container Line. He kind of threw cold water on it, said, well, because the market liked it. There was a market rally. He said, it's based on smoke and mirrors. David, what is your take on this trade deal taking shape between the United States and the United Kingdom?
Well, it's not that big a deal. They're not that big of an economic impact to begin with as a trading partner. Okay. We are aligned on a lot of things, the UK, obviously, from our founding, et cetera. But economically, we don't import a great deal of goods relative to other countries we import stuff from. And the deal has a lot of, I wouldn't say it's smoke and mirrors, but it was sold really well, right? And again, the market was desperate for something to say, all right, they are actually achieving trade deals. They're knocking them down like they've been talking about. So any details being released, when this one came out, it's the first one to actually have at least a decent amount of details lined up. But there's still tariffs, right? And there's still going to be some negative headwinds caused from this. And so the freight CEO you're speaking of was right, because it's going to hinder shipments, which is what we see in the data.
Well, now, there was another interesting development. I should note, we're recording this show on Monday, May 12th. We usually do it on Wednesdays, but for scheduling reasons, we need to do it. And this was a late-breaking development. Stocks climb on China-U.S. trade progress. That's a Fox Business headline. Is the Trump strategy regarding tariffs finally being vindicated here? China's coming to the table?
They are. And I've been telling for a while here that China is in much dire straits compared to the U.S.
China needs us more than we need China.
They do. And so they came to the table. But again, this deal does not have that many true details lined up in it. And so I thought it was interesting is because this deal got announced Sunday. And then when the futures opened up, and they started scrolling and getting higher and higher and higher. In other words, this is the futures market betting that you're going to have a strong open. And of course, we had a very strong open this morning on Monday morning, May 12th. The question is, where will we be at the end of this week? When you hear this radio show, I will know this number, but not at this recording.
Yeah.
That's what we look at is data and some of the weekly flows, because sometimes there's this sell the news type of event, right? You buy the idea and then you sell once it actually gets to fruition. What we also thought was interesting is literally within hours of that, Trump then put out a tweet, that was saying he was going to put an executive order on pharmaceutical companies, drug companies in particular.
Trump to cut drug prices by more than half, at least, with a pharmaceutical executive order. Some of this language, I thought, is this Donald Trump or Bernie Sanders talking? Americans are getting ripped off. We got to be fair. What's your take on it?
So while the market was up, well, it's a couple-fold, right? So while the market was up, we saw stocks like Eli Lilly, some of the market leaders as of recently, getting hit pretty hard on this because this means that they could be taken on the chin, and this would be your big pharma, right? Merck, GlaxoSmithKline, so et cetera. And so what we want to figure out is what's the reality here. So by his executive order, what he's saying, Chip, is, hey, we're not going to pay for the rest of the world, which I agree with. The philosophy of, if you don't know, all the R&D that big pharma puts, which is about $2 billion per drug, to get it to market. So they spend money they deserve in a capitalistic society to be able to price their drug to get recouped on their investment. There's a couple of ways to make this much easier. They start the patent, just so you know, these patents typically run 20 years in the pharmaceutical world, but they start the patent the day you discover and patent the drug, Chip, but it might take you another 12 years to get it to market, right? Through clinical trials, testings, there's multiple phases.
So it's still not paying off for
right.
you.
Well, they do. They have a 6 to 8 year window to get all their money back, right? They've been spending R&D and scientists research. So that's why these prices are to the moon. And look, I mean, I know exactly what's going on in my whole household right now. Spending a lot of money on some therapeutics, et cetera. So here's the deal. The rest of the world gets contract pricing, right? And they have a socialist state of medicine. So some countries in the EU are paying $9 for a product you are paying $900 for.
Oh, so we're getting gouged here.
Absolutely.
Okay.
So what he's doing is either those other countries are going to have to step up and pay more, or our pharmaceutical companies are going to have to take less here to deal with the government, because he's going to say, look, we're going to, any government entity that's buying these drugs, so Medicare, Medicaid, et cetera, has to get the contractually best price. What's wrong with that? Not only, though, inside our borders, but outside as well.
Yes. Okay.
So I believe what you're going to see is these companies are going to have to renegotiate their contracts with other countries and make them pay more, and they're going to have to squeeze their margin down. So they're going to probably do a mix of both. We don't know how the reaction is going to be, but as you and I, as John Q. taxpayer, and as American consumers, this is a win.
So it's not a socialist communist rant against big pharma. It's, hey, big pharma.
Stop taking all the blood from one of the honeypots, which is the American consumer. Right.
You need to make money on this. You need to make a profit. We understand. Let's just make sure everybody's paying a fair share, bearing some of the burden for this.
Most people don't understand the full cost of healthcare because they get their healthcare, or 80% of Americans get their healthcare through their employer, right?
Okay.
Very common. And you don't understand how much your employer pays on your behalf. Most employers are paying over 70% of the freight of your healthcare expenditure. So when you pay that payroll deduction to sign up for the benefits, you're paying a small piece of it. And we went through 2 over 30% back-to-back rate increases on our group plan here the last couple of years, and I ended up changing to a different style plan. Now you guys get to buy your own insurance, and I give you a tax-free reimbursement called an ICRA, right? I had to make adjustments as a small employer to be able to afford to continue even giving the benefit, because here's the thing, Chip. If you go back to 2010, it was single digits of that healthcare expense went to the pharmaceutical part of the healthcare. It's at like almost 30% now. So now, and just look at TV commercials. 3 out of 5 commercials when you're watching sports on the weekend, the only TV I really watch is a pharmaceutical. Ask your doctor about so-and-so. And then they list off 65 different things that can happen to you. I'm like, what does that really do? Is it really that bad? But anyway, a joke. But listen, pharmaceuticals have been pushing marketing, et cetera. And who's paying for that marketing? It's not cheap, right? You and I are. And so now he's trying to spread the load around. Okay. And again, RFK even wants to stop them from advertising. We'll see how that works out. But bottom line, Hopefully that does drive the end user price down, and it drives the cost of our government's medical spending down, which is over 50% of all healthcare expenditures in the United States today.
I'm going to squeeze in a quick one here, David. You sent the team, this is more of a grassroots economic indicator, I guess, but you sent the team some data about Uber, that Uber was being touted as a hot stock because it won't be affected by tariffs, but an 18% miss in revenues? Is that what I'm seeing?
Yeah, so Uber, just so you know, this was one of the stocks that some analysts and TV talking heads were like, hey, this is the anti-tariff stock you should buy, right? Because they're not going to be affected by tariffs, right? They're not importing. They're drivers here, cars are already here. So why would their stock get hit? Well, user demand is dropping significantly on Uber, and that has to do with a lot less travel. I know I use Uber personally when I'll be on a plane tomorrow, right? And when I get off, typically to get me to my hotel or speaking engagement, whatever, I jump into an Uber. It's a lot easier and more effective than rental cars. I do rent a car occasionally, but nowhere near as often as I used to.
So Uber's still in demand, so what happened?
Well, their demand is dropping, though, and this is showing you that their demand is drying up. People are, and the other thing is people used to use them for, hey, I'll just Uber over to somebody's house for, a collected night out in the town. I'm like, I can't really afford that. In other words, we're cutting back. You can see the consumers cutting back on discretionary spending, and this is evidence. So again, while the markets are flying high on this idea of trade deals, it may end up being a sell the news event because the economy is not really any healthier today than it was just 2 weeks ago.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week. The University of Nebraska and University of Nebraska Athletics, also known as Nebraska Cornhuskers, are not clients of Smart Wealth LLC or Retire Smart LLC. Playfly Sports Properties, on behalf of the Nebraska Cornhuskers, was compensated for this endorsement as such term is defined under SEC Rule 206, subsection 4-1. For more information, visit retiresmartnow.com/cornhusker disclosure or email compliance@retiresmartllc.com.